Joining us now with more is Galileo Russell. He's a founder of HyperChange TV. Galileo, good to see you as always here. We know Tesla indicated last month that it would restructure the company. So is this move, 9% of the workforce, surprising to you?
It's a little bit more than I was originally expecting, but frankly, like seeing all the news on Twitter and the stock react, like I think it's a little bit of an overreaction because, we knew this was coming. They announced in mid-May that they would be doing a reorganization. And so I think this is just the logical next step of that. Although I would say the 9% is maybe slightly more than I was expecting. But the bottom line is when you have a company that's so big and has grown so quickly, like I think at some points it's necessary to trim the fat. And that's just what we're seeing Tesla do.
What do you make of Elon's decision, and this is coming from a tweet, of not cutting any of these positions at factories right now, but more so cutting the salaried positions? How do you read into that?
Yeah, I think it makes sense. I mean, they're focusing on the jobs that are going to be driving revenue and profit from the company and cutting everything else. And so obviously the Model 3 ramp is the most important thing right now. So keeping that production line fully staffed, I think, is a must. And beyond that, Tesla did say like they're continuing to hire. They do need to hire eventually, and they will do so aggressively. But this is just sort of like a one kind of trim the fat move, or that's how I'm reading into it.
So in terms of what we know, the 9% of the jobs, Galileo, do we have any indication of where they might come from? I mean, you follow this stock a lot, and so are there ways that you think areas where it would make sense for Tesla to scale back a bit in terms of the number of employees that it has?
From my reading, it looks like this is across various sectors of the company and geographies. And so I just look at this as a more broadly like them cutting out the lowest performing employee. And, as an investor, like, although it's tough to let people go, I think this is the natural progression of a cutthroat Silicon Valley company is, they're constantly evolving and evaluating who should be working there. And laying off 9% of employees is going to be huge for their push towards profitability. So, I think this bodes really well for the numbers in Q3 and Q4.
Hey, help us dig into this a little bit, Galileo. So I'm reading the statement that Musk just put out on Twitter about 35 minutes ago. He said, quote, in addition to this company-wide restructuring, we've decided not to renew our residential sales agreement with Home Depot in order to focus our efforts on selling solar power in Tesla stores and online. The majority of Tesla employees working at Home Depot will be offered the opportunity to move over to Tesla retail locations. So it wasn't that long ago, of course, that Tesla bought Solar City and then started selling some of the Solar City products and now rebranded Tesla products in Home Depot locations. That was something that investors seemed to like. What do you make of this move?
Yeah, I was really excited about that, but as was discussed in the conference call, the biggest problem with Tesla's energy division is that they're supply constrained, not demand constrained. So the Home Depot move was accelerating demand for those products when supply was really still the issue. So I think they can generate enough sales of the energy products in their own Tesla stores, and they don't need to go to Home Depot right now. So it's just maybe a premature expansion for the company, and they realized that that just wasn't necessary and they didn't need to focus on that now. But I don't think that changes the narrative of these storage products being very disruptive and having a lot of potential in the long term. Just the go-to-market strategy was a little bit off with Home Depot.
So Galileo, just to confirm here, do you buy that this is not going to affect the Model 3 production? That's what the reports are saying.
I mean, I don't believe anything Tesla does until they actually do it, but I am very confident that they will hit the 5,000 per week. And I think, the company knows they need to get there. And so I doubt that they're going to mess with that part of the company because that is where all the focus is.
What do you think of this sort of renewed humility coming from Elon Musk? Right, so we're seeing in this statement that he wrote, given that Tesla has never made an annual profit in almost 15 years since we have existed, profit is obviously not what motivates us. What drives our mission is to accelerate the world's transition to sustainable, clean energy, but we will never achieve that mission unless we eventually demonstrate that we can be sustainably profitable. That is a valid and fair criticism of Tesla's history to date. What do you think of that humility coming from Musk?
Awesome to see some humility, but frankly, I don't think he fully understands like how the market interprets the company here, because like companies like Netflix reiterate that they will be negative, like have significant negative cash flow for years as they invest. And so I think Tesla is going to show a profit these next 2 quarters and potentially then start spending significantly more and then losing free cash flow. So I don't think then just being profitable for 2 quarters, like it's great that they're showing the market that, but I also think that Elon's a little bit misguided thinking that's the only focus. Like I think investors are fine with the fact that Tesla could be losing money for the next 5 years as long as we see the growth. So I don't know. I'm a little bit. I understand that they do want to show profit, but I also think he's not realizing that investors understand that you have to make investments to be able to grow, and would give him leeway if he just guided that they would have negative cash flow.
So the stock coming off the session highs, Galileo, now up just under about 3% or so. At one point it was up just more than 4%, of course, on the session. There is an intraday chart. Does the move by the stock and what investors are doing here today, what do you make of that? And again, reiterate too what sort of your long-term, short-term and long-term thesis is now expectations for Tesla.
Yeah, so I think this is just a total blip and we're going to forget about it. I actually earlier today just recorded an episode about why Tesla stock has gone up so much in the past couple weeks. I mean, it was still at 275 like 2 weeks ago. So even at 340 here, down a little bit on this news, is still up. And I think, this isn't a short squeeze. I think the intrinsic value of Tesla as a company and the fundamentals are improving drastically, and that is driving the share price higher. Like fundamentally, if they can go profitable with Model 3, I mean, they're building already twice as many cars as they were a year ago. Like they're just growing, and I think the earnings power is growing and the intrinsic value is greater than ever before. And I think that trend will continue throughout the year. And that is why, I am thinking the fair price for Tesla shares at the end of the year is around 400, because I think they'll be at around a 25, 30 billion revenue run rate, and about a 2.5 times sales multiple on that seems pretty reasonable. So I still think the company actually is frankly undervalued for what they're going to do in the next 6 months. And this layoff news is just a blip, and we'll forget about it in a week.
Galileo, give us a little bit of historical context here, because as we talked about a little earlier, Elon Musk starts out his statement saying, as described previously, we are conducting a comprehensive organizational restructuring across our whole company. What was the extent which that investors knew about a reorg coming? What did you hear before?
I mean, I knew about a reorg just because of that news that hit in mid-May, and frankly, the operating expenses and limiting growth in that part of the income statement is really what's going to allow Tesla to be profitable. So I wasn't assuming they would do anything this size, but I think a 9% layoff could be a meaningful reduction in their operating expenses. So to me, the only way this news changes the narrative is I think there's actually now an even better chance of Tesla going profitable in Q3 and Q4.
Wow, and we know obviously 400 would be a big bump up from its current price of $341 a share right now. Galileo, in terms of raising capital, does this prevent the company from needing to raise capital sooner than it would have otherwise needed to?
Definitely. I think this is just a step in that direction of them being, independent and not relying on the capital markets. And Elon Musk seems to have a personal vendetta to prove that they can be cash flow positive, get through this Model 3 ramp. And I think, they're doing what they need to make that happen.
All right. Galileo Russell, founder at HyperChange TV. It's always great to see you. Thanks for joining us on this breaking news.
Yeah, thanks for having me.